Good morning, everyone, and welcome to the weekend update. I'm going to try and keep this video short and not talk a whole lot about stocks, but kind of give a little bit of an overview on what I see in the market right now. Now, it was a very interesting week. Lot of volatility. Volatility is not a bad thing, and I'll get into that in a little bit. But of course, the Fed was the excuse they used to drive the action this week, but it really was a massive options expiration, quadruple witching as they call. And as we saw Wednesday, Thursday, and Friday, when there's big money involved, the big guys will push things where they want them to go and where they will make the most money. The object, every option expiration, is for the option writers and brokers to make the most number of calls and the most number of puts expire. And when the whipsaw crazy action we saw Thursday and Friday, they accomplished their goal in a big way. Back to the Fed, though. I actually, and my view on this was, the Fed statement was as perfect as it could get. If you had your head in the sand, the fact that they said they may raise rates a couple of times by 2023, yeah, it probably came as a surprise to you. But then you probably get your news from some of these TV shows here, and I won't go into their names. That news was good. What we saw after the Fed meeting and what they said bodes very, very well for the next couple of months. And the reason I'm going to say that is, we're going to look here. You can see the Dow sold off. Now, what drove the sell-off in the Dow this past week was the largest outflow and move from value stocks to tech/speculation in 14 months, essentially all the way back to April. And you recall back in April and May, then June, that's when the real mania started to hit last year. So we had a massive flow out of value stocks and into tech stocks. Now, you recall earlier in this year when we had the mania in the market, it was ended when the quotation mark inflation trade happened and the market moved out of tech and speculation into the boring caps like Home Depot, like Goldman Sachs, etc., etc. And you can see now over the last few days, there has been a rush out of these stocks. And where has that money gone? Well, check out the QQQs. Qs did have some up and down action this week, but considering the carnage you saw out there, especially with a quadruple witching, they held up very, very well. The likes of Tesla trying to break out all week. A lot of positive news probably behind the scenes here, and this one's actually looking to break out. Check out AI. Now, AI, this is a stock that's gotten whooped since that rotation happened starting back in February, and it has been coiling right under its 50-day moving average. So while everyone's running around with their heads in the sands, I actually like what I'm seeing there. I think the money is about to flow to the speculation. Now, it's not going to happen immediately. In a market like this, 70% is as low as I want to go with my cash stance. Ideally, I'd like to be 75 to 85%. And then, maybe if we get a month or two of mania, I might reduce my cash and start playing larger and larger. But when you see rotations, even though it's a rotation that I think is going to be very beneficial to the speculative trader, you don't rush right in when the rotation's on the way. As you saw Thursday and Friday, things go up big, down big, up big. So you let the rotation happen with your eyes out on what's going to happen. Value plays, tech plays, we're still seeing, and I mentioned it a couple of times last week, and we're going to go over a couple of these stocks. The good stocks, the great stocks, in my opinion, with reasons and charts to move over the last few days, were not moving. This was actually one of my lowest trading weeks, I believe, in a long time. Really just watched a lot of things and focused mainly on my current swings, just because when you see utter garbage running and their peers that actually make more sense doing nothing, that's usually a sign I sit back. Now, granted, a lot of those run-ups are due to behind-the-scenes offerings that are being planned, etc., etc. But let's take Play, for example. While all the memes are chasing AMC, which is a dead business, but it's got a high short interest, everyone and their mom loves it for now. Once movies really start to hit the theater chain, you've heard the sell the actual event news. We'll see what AMC does once reality really starts to pour in there. But look at Play. play is almost back to where they were pre-pandemic. This is as big an opening play as there is, and they make money. Read that last earnings report, and it's got a huge short in it. You could see over the last few days, each day they would gap it down on really, really low volume. It's back down to the bottom of its trading range. I like this stock long term and as a swing right now, and this is the kind of stock that when reality hits some of these insane meme stocks that really are insanely priced, you could see them move into a stock like PLAY in the near term. MLND, this is a stock. Merger paperwork last week, $1.89 merger value. The vote is Tuesday. They still continue to run stocks like BBIG, etc., but you can see this W formation is still nicely in play. Monday, Tuesday should be pretty nice on this stock, but again, it's all going to depend on what the feel is out there in the market. I got to mention UAMY just because, like everyone else, we're waiting to see when they launch their GeoCities-based Flash website. This is probably, Gishi used to have the crown for the worst IR department. I think these guys beat them, 50 times over. Maybe we'll get the news tomorrow. Maybe or Monday, Tuesday. Maybe not. Still love the story here. It's just a matter of hopefully these guys are sitting on some big press releases and we're going to wake up one of these mornings and get surprised by it. CSCW, they got a lot of things going for them. This upcoming week is the Russell rebalance. Breakout is 120, 125. And if the volume really comes in here, these algos that are chasing the garbage, if they actually jump into some of these nice plays, this is a stock that has a chart that could do very well. AIHS tried to break out through both of those moving averages this past week and, of course, got rebuffed. We've got a nice little flag on this one now, so it's just setting up for that breakout. Now, there's a couple of big positive things for this stock. There's the DD Uber of China IPO looming possibly in the coming weeks, but then also there's the Chinese investigating these guys for anti-competitive behavior. So these guys are partnered with DD, but they're also a small competitor of DD. So the winds out there are pretty bullish for this stock, at least in the near term. Speaking of stocks that get overlooked, here is BHAT. These guys made money, profitable, under $1. I believe it's the only under $1 profitable stock right now. But what do they chase? Well, because the algos liked WAFU, they chase WAFU. Up and down. BHAT, they're not interested until the scanners tell them probably the chase at $1.25. That has been the theme. The other one is CHCI. CHCI just is really, really amazing. It has to have picked up a lot of shorts in recent days, but this cup and handle formation is setting up here. Close over 7 is where the setup is. Profitable company in the hot sectors. Instead, they chase after stuff like AHT, IVR, etc. When a stock like this that makes money, dirt cheap, low float, high short, etc., sits here and just pauses, waiting for the algos to find it. And then last but not least, VERB. They told us many times mid-June is when they were going to do their Microsoft update press release. Let's see if it comes Monday morning. This week is middle of June. Actually, last week was, but they could get away with saying this week too. 200-day moving average, 143. Held up above the 50-day moving average. You can see when you go back on a lot of these stocks, the weakness that we've seen in a lot of the small speculative stocks were more of people watching the indices and panicking. Probably because they're oversized in positions and really are pandemic traders. And what I mean by a pandemic trader is someone who showed up and has made money the last 2 years in the market. They don't actually know what a real market's like. They don't know what rotation looks like. They don't know what sitting on high cash looks like. They're still playing the same Lamborghini-sized trades, trying to get their payment each and every day, when sometimes the best trade is no trade. And that's usually how I approach the market. But hey, what do I know? I've only been trading for 20 plus years. I like what I'm seeing in those rotation, but as is the case on many things, patience is required while it's ongoing. There will be plenty of time, I know it, I've seen it before, that when the mania hits, things will turn around. You don't need to, I don't think so, start rushing into everything all of a sudden. A little bit of patience. Things look like they're setting up very nicely. So enjoy the rest of your weekend, everyone, and I will see you in the chat room next week. Bye.